Hey everybody, this is Jim at SP500chart.com. It is a little after 5 o'clock on September 5th, 2013, and we're going to take a look at the chart using some time-honored techniques to try to understand these modern markets. Before we do so, I need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's see if we can make some sense out of this. Well, first, the good news. We are still over this orange line, which I think is good. And I think it bodes pretty well for the short to intermediate term. We're not over it by a tremendous amount. With the close at about 1655, let's call it, where this line is at the close, we're getting close to the point to where you can say, yeah, that's definitely technically significant. But what looks to me to be more technically significant is the fact that we've been over it for just a shade under 2 days. So it's not so much the distance now as it's also beginning to look like the time spent over this line is looking to be potentially of importance as well. But there are still a couple things that I think the S&P is going to have to overcome with some conviction, and that is this gap resistance level right here. You can see today opened up over it, got over it, well, didn't open over it, but got over it quickly, but then came back and just kind of hung around this line and closed a little bit under it. Now, a little bit of good news. You remember we had what we thought might be an inverted head and shoulders pattern some while back here in June and early July, where it looked like we had a left shoulder and a head, but no right shoulder. Well, that line extends out to where we are now, and for what it's worth, we are now over that line. So I think that probably is also a positive. We are also still over this rising trend line that again has its genesis in the November 2012 lows. Here, let me line that up again for you, because it moves a little bit when I scale in and out of the chart. So you can see there's the low, there's our June low, and we really pretty much bounced on that line. Now I remind you, I am looking at this on a logarithmic chart. If you are looking at this on an arithmetic chart, it's going to look maybe a little bit different, but you should still see that we are above this line. So, what are we looking for? Well, again, if this is a good and legitimate bounce, then I would be looking for resistance up at this neckline area right here on the head and shoulders top that broke down. Here's that line right there. I would say that should be, if we can overcome this gap resistance where this fight is being waged right now, if we can overcome this, that looks to be a very, very good spot as a target. Now, looking at this chart into the future, we may see some additional things develop that could well, let me put it this way. We always see things develop that alter what we expect in the future. Otherwise, we could look at this chart right here and say this is what the markets are going to do in 2023. Obviously, we can't do that. But I'm seeing one other potential thing here, and it could be we could find some resistance up here at about 1670 as well. And if that's the case and we back up a little bit, it's even possible we form an inverted head and shoulders down here. That's possible. But we don't see that yet. So until we see that, we'll just be open to the idea that maybe there's going to be some resistance about there going forward. So I'm going to make this a very, very, very light gray line just so it's there to remind us when we get there, if we get there, that we may get a little fight here too. But the tendency for head and shoulders patterns, for any top pattern, whether it's a major, minor, or intermediate top, the tendency is there's usually a back test. And we haven't gotten that yet. And if we get it, it will be now likely into the low to mid 1690s. That's, I am long SPY as of this move back here on the, back here on the 3rd. Was it the 3rd? I can't remember. It was either the 3rd or the 30th. I can't remember where it was. But I'm long here, and I may be looking to get out if we come up to this level here, because we've got this neckline. We also have another area of gap resistance. So let's just see what kind of strength the market has going forward. If we look at today's trading kind of in up close and personal, I'll be honest with you, it's just sideways. There's nothing that looks frightening about this. There's nothing that looks encouraging about it. It just looks like we're just going sideways, because that's really exactly what happened. Simply the fact that we are doing so over a couple of expected technically significant lines, I think that speaks well for the slant now to be, for the table to be slanted, or the playing field to be slanted somewhat in favor of the bulls. So this should be support, this should be support, this should be support. The only resistance that I can see on this chart is right where we are right now. And if we get over that, the next resistance could be what I just showed you back around 1670, but for sure up here. So that's just kind of what it looks like to me. The good news is there is support closer to where the market is trading right now than resistance. So I think that opens up room for some upwards movement in the days ahead. So there's your video for September 5th, 2013. Thanks for watching, and especially thank you for your support.